So, a warm welcome. Lovely to see so many of you on the call. This is a webinar that we're running really for the first time, and we're delighted to be running a joint webinar together with Paperweight. We at Work Avenue partner with a number of organisations, and it's lovely to be able to partner with Paperweight on this, really, really important topic. So I'm Melanie Pearl, and I am the Head of Employment at Work Avenue. And I'm joined by Sarah Gatoff, who is, I always forget Sarah's title, but she will introduce herself in a moment. She works in the employment team, head of the employment advisor and head of events, actually, I've just remembered. We will just introduce ourselves, and then we'll ask the people from Paperweight to introduce themselves. And then we're going to talk you through some of the difficult questions that people have in regard to benefits. You're talking to the absolute experts here. So just to tell you a little bit about Work Avenue and what we do. So what we do is we're all about work, as the name suggests, and we work with everybody. We work with people right from the age of 16 right up to people in their 70s and beyond, and everyone in between. And what we do is we help them to find work. That's what we're all about. We have two divisions. We have an employment division and a business division. I work on the employment side, as you know, where we're looking to help people to find a job. And we have a business division that helps people to either start or grow their own business. We also have a hub where people can hire desk space from us at different levels, depending on how big they are. And when they get really big, they don't need us anymore. And basically, we're an incubator for that to happen. Just to tell you a tiny bit about my background. My background is HR. I started Legal and General, worked in local government. Then I was the HR director at the United Synagogue, and I've run my own business my own HR and career coaching consultancy for the last 10, 12 years, alongside working at Work Avenue. I help people both to look for work, and I'm also helping people to find the right employees. And just to introduce Sarah as well, give you a chance to introduce yourself, Sarah.
Hello, hi Mel, I'm Sarah. I work on Melanie's team, on the employment team at Work Avenue. I've got a business background. I come from a retail background, and like Mel, I also run a business when I'm not here in retail consultancy. I started at Work Avenue in 2022, and I now work as an employment advisor, and also I head up our events planning team here on the employment side.
Thanks very much, Sarah. And then if I can just introduce Barry and Ben. Maybe Barry first, if you'd like to just do a quick introduction, and then I will hand over to Ben, because Ben is going to be running a presentation for you all about that.
Hi, pleased to be here and to be collaborating with Work Avenue on this webinar or seminar, whatever it is. I've been at Paperweight for 6 months now. I'm the executive director, and I work closely with our CEO, Bela Perrin, and the team here at Paperweight. I think, Ben, you're going to briefly introduce what Paperweight does, so I'm not going to repeat that. So Ben is the main speaker today, so I'm going to go back onto mute and enable us to hand over to Ben.
Brilliant, thank you very much. So just before I hand over to Ben, just to say that, I'm delighted to see that there's a number of you on the call. You will all have your own individual reasons for joining today, and there will be an opportunity to ask questions at the end of Ben's presentation. Just to ask that what's said really is more general. So the questions you ask, rather than being individual to you, are ones that perhaps will apply to everybody else. And Ben will be giving you contact details and sending a copy of the slides. Will you be able to do that, Ben, as well?
I'm not sure on the slides, but we'll have the contact details and how to get in touch with Paperweight.
Right. Okay. So any individual queries you have, then you'll be able to get in touch with Ben.
Yeah, for sure.
Thank you very much. So I will hand over to Ben.
All right. Thank you so much. Hi there, everyone. My name is Ben. I work here at Paperweight as a benefits advisor. I've been here for just more than a year now. In terms of, if you don't know what Paperweight is and what we do, we're essentially sort of the Jewish community's advice center. We advise on a range of different issues, including sort of guidance on some areas of family law, debt and finance matters, and then welfare benefits, which is what I do sort of every day here in our main office here in London. We also have small regional offices going on in Manchester and Gateshead and one in Leeds as well. So the charity has been around for a number of years now. I think it's more than a decade that we've been operating and sort of helping the Jewish community across the country with a whole wide range of matters. And in terms of what I'm going to present today, I'm just in a moment going to start sharing my screen. A moment. Okay, you should all hopefully see my screen now and see the presentation. We're going to look today at welfare benefits, but specifically we're going to look at how welfare benefits can be sort of received and how they're affected if someone is working at the same time. Okay, so our presentation this afternoon is going to have three main parts to it. Firstly, we're going to look at means-tested benefits. What does the term means-tested actually mean? What are the rules around means-tested benefits? And how does universal credit, which is the main means-tested benefit nowadays for people on a low income or out of work, how does that actually operate? Second, we're going to look at the topic of contribution-based benefits. What is a contribution-based benefit? What are the main conditions that people need to meet to receive them? And then what's the difference between the two main types of contribution-based benefits, which nowadays are called New Style ESA and New Style JSA? And finally, we'll look, once we've got a background into all these terms and what they all mean, we'll try to apply it to some real-life case study examples. And they'll look at some fairly common situations for individuals or even families that people find themselves in when working and perhaps receiving benefits at the same time. Each case study will kind of reflect some real life things that I've come across in my experience as a benefits advisor. Okay, so we're going to get started on our first section here, which is about means-tested benefits. So what does that mean, a means-tested benefit? In short, it refers to eligibility rules regarding an individual's or a couple's capital or savings amounts. And rules about how their income, and that can be a few different types of income, affect the actual amount of benefit that someone receives. On the left of the slide here, you should see the heading capital and savings. Capital amounts, for the purposes of means-tested benefits, that can include a lot of things. It can include cash savings, amounts in current accounts or savings accounts, include ISAs, but also other things like bonds, stock shares. Nowadays, it even includes things like cryptocurrency. Capital will not include the home you live in if you own that home, but in almost all instances, if you own another property that you don't live in, that will be counted in your capital calculation. There's two numbers to remember when we talk about means testing benefits and capital. That's a 6,000 and 16,000, so £6,000 and £16,000. If a person or a couple, if it's a joint claim, has more than £16,000 in total capital, they're not eligible for means-tested benefits. If they have less than 6,000, which is our smaller number there, they are eligible, and the amount that they have will have no impact on the actual benefit that they will receive. If someone finds themselves in the middle of those two numbers, so between 6,000 and 16,000, the actual amount of savings or capital they have will result in some kind of deduction being taken from their overall entitlement and will affect the amount they actually receive. There's many more things that could be said about the capital or savings rules of means-tested benefits, but in the interest of time, we're not going to go too deep into it. The main point to take away from it is that the £6,000 number and the £16,000 number there. On the right, you'll see I've put income. Now, the number to remember here and the basic rule of thumb is that if you claim a means-tested benefit and you earn an income at the same time, so you could be working and claiming a benefit at the same time, the deduction that they will take based on your income, they will multiply what your income is by 0.55 to take a 55% sum of that number and deduct that from your overall entitlement. So if we just think of it in a really sort of round numbers kind of example, if someone earned £1,000 in a month from a job that they did while claiming a benefit, the benefit office would take that £1,000, they would multiply it by 0.55, which gives a sum of 550. they would take the number 550 away from the total entitlement of the benefit that someone was due to receive, and they would receive the remainder of that benefit amount. The £1,000 they earn, they could of course keep that because that was through their earnings from work that they were doing. That's the simple rule for income as well. Again, it's much like capital and savings. There's many more parts to the income rules which could be gone into, but for now, those are the main points on income and capital for means-tested benefits. We're going to talk about one means-tested benefit today. It's the main one that's relevant to our presentation. It's universal credit. It's not the only means-tested benefit that's available, but it's the one that's most relevant for working-aged people. I'm going to focus on 3 parts to universal credit. Work requirements, in terms of if you claim universal credit, what work requirements do you have at the same time? Work allowances, and then also self-employment. What's it like to claim universal credit and be self-employed at the same time? All right, so we should see on the screen now work requirements, and 3 different terms here. The first one, I'll start at the top, LCW, which is what is often referred to for limited capability for work. Now, the one just below it as well is similar, limited capability for work and work-related activity. That one's a bit of a mouthful, but it's called LCWRA. These are 2 different classifications of how someone's working ability may be limited due to a health condition or disability. So many people who claim universal credit will have a health condition or a disability that means they can't work on a full-time basis. Doesn't mean they can't work at all, just means their working ability is limited. If someone's working ability is more severely limited, they're more likely to be put in the LCWRA group. If it's slightly less limited, it's normally LCW. Since I think about 2017, being assessed LCW means that a claim does not come with an additional element of money. So if you get the LCW classification, you don't get any additional benefit on top of the standard allowance of universal credit for that. LCWRA, on the other hand, does come with an additional health element involved. Now, how does someone get sorted into one of these 2 groups if necessary? So they go through the WCA, which is the Work Capability Assessment. The WCA looks at how someone's health conditions affect them in a variety of different ways. It's actually a points-based system. So they look at some different activities. They assign a certain number of points based on the answers and an assessment of what someone says their health condition affects them on. And then they can get put into either LCW or LCWRA. The WCA is going to come back again at a later point in this presentation, so just keep it in mind because it will make another appearance. Okay, second part of universal credit here, we're going to talk about work requirements. Now, this is quite a big topic. I'll try and get through it sort of as efficiently as possible. There's 4 groups of work requirements that someone can be put in if they claim universal credit. So someone makes a universal credit claim, they're going to be put into one of these 4 different groups as part of their claim. The first group they could be put in is the no work requirements group. And this means that someone is not given any work requirements by their work coach at the job centre as part of their claim. They don't have to look for work. They don't have to prepare for work soon. They essentially receive the universal credit with no work requirement placed upon them at all. Now, what kind of instances might this be? That would be someone who gets an LCWRA classification, like I just mentioned. It would also include the main carer of a child who's under the age of 1. So if you've just had a child and you're the main carer for that child and they're still under the age of 1, you'll be put in the no work requirements group. Also could include people who are determined to be earning enough. Now that means someone may be earning from paid employment to the point where they don't have to look for any more work. They've essentially been determined as that the amount of work they're doing is sufficient in the opinion of universal credit. You see I put pension age there. That also so this no work requirements group will also include pension age people if they're part of a universal credit claim that's called a mixed aged couple claim. So you might have one person in a couple who's pension age, so they're not working. You may have one who's below pension age. That's a mixed aged couple. The pension age person has no work requirements placed on them. The person below pension age will be put into a different group based on their circumstances. I'm going to move on to work-focused interviews only, which is our second group here. Now, I just want to be clear what I mean when I say interviews. I don't mean job interviews. What this term means is it refers to periodic meetings with a work coach as part of a universal credit claim. In terms of people who'll be put onto this group, that would be the main carer of a child aged 1, and I think it's between the age of 1 and 2. Or in slightly less common instances, if someone's become the friend or family carer of a child who's under the age of 16 in the last 12 months. That doesn't mean becoming their parent or step-parent. This one is not a hugely common group to be put in, but it is one of the 4 that's possible. This one is a lot more common. Work-focused interviews and preparation. So this is if someone gets sorted into LCW as their work their work capability assessment result, they'd be put into this group. Work-focused interviews and preparation generally means that someone is unable to work now, but is expected to be able to return to work in the near future, and roughly you might say around 12 months. So that would include someone with LCW. It's expected that in about a year or so they should be well enough to return to work, or a main carer of a child who is now 2 years old, but under the age of 3. You can see kind of the main carer aspect there, that if you have a child and you claim universal credit, as the child gets gradually older in their early years, your work requirements as part of your claim will gradually increase over the years. And then finally, this is the last group, which is all work requirements. And this is kind of the big group where you will be required to search for work and make yourself available for work to receive universal credit. So that would include anyone who doesn't have a health condition that limits their ability to work. It is possible to be in this group even if you are working. If you're earning below something that they call the administrative earnings threshold, which essentially is about national minimum wage, whichever one applies to you, for 18 hours a week. If you're earning less than that amount, they generally still keep you in the all work requirements group, and they ask you to search for more work or to increase your income, essentially. There are some instances where work requirements are sort of temporarily not imposed. This could be due to sickness, bereavement, if you're placed in the earning enough group, like I said, and then a few other instances are not overly common. And all work requirements will be the most intensive in terms of work searching. You have the most often meetings with your work coach and have to search for jobs and employment most frequently. All right, we'll jump into work allowances. Now, when it comes to working and claiming universal credit at the same time, if someone is working and earning, they can apply what they call work allowances, which means they don't necessarily take the full, they don't take the 0.55 times deduction from your full income amount. They can kind of ignore an amount of it, give an allowance for it. So there's 2 types. There's the higher allowance and the lower allowance, which is £684 or £411. To receive either one of these, you first have to either have a child element included in your claim, so you have a child that you're the main carer for, or you're sorted into the LCW or LCWRA group. And that's the first requirement. Then, if you have a housing cost element, so you get housing cost support money through your universal credit claim, you'll get the lower allowance. If you don't have a housing cost element, so perhaps you own your own home, you don't rent, you won't get the lower one, you'll get the higher, so it's a slightly higher amount. What this will mean is, imagine again, we've got that round number, that £1,000 earned income. Say someone gets the lower allowance, the first £411 of that £1,000 they've earned, universal credit will ignore that. They'll ignore that 411, and they'll only take a deduction based off of what remains. So they'll times that 0.5, that 411 by 0, sorry, the remaining, or there'll be 589, and then they would times that by 0.55 to take a deduction on that one. All right. We'll look at self-employment now. Now, when it comes to self-employment universal credit, it can be a little bit complex, to be completely frank. It is an area where a little bit more sort of detail is needed before people start actually claiming universal credit and being self-employed at the same time. One of the main sort of issues or things that comes up is how exactly do they establish what someone earns as a self-employed person while claiming universal credit? The basic formula is they take someone's income, or officially they call it receipts, they minus their permitted expenses, and that's determined to be their earnings. This has to be reported by the person who's claiming the benefit every month. So they'll have a task to do on their universal credit claim every month to report what income they've had from the self-employment, what expenses they've had to pay as part of doing that employment, and then that will determine their self-employment earnings for the month. Any deductions that are relevant will then be taken based on that self-employed earnings sum. Now, what exactly are permitted expenses? That suggests that there's, some things are permitted and some aren't, obviously. This is not an exhaustive list that you can see on the screen, but it's generally the most common things that will be relevant at the time. So that could be things like rent for office space or for, other business space that you use, the cost of utilities for those spaces, insurance costs or wages, stock for if you sell goods or something, advertising costs, equipment purchase, VAT, and then transport. I mean, the transport's a slightly difficult one because there's kind of a flat rate deduction taken on the number of miles you've had to travel. But these are generally the most common things that will be determined as permitted expenses as part of a self-employment calculation. There's another thing that we have to talk about, which is called gainful self-employment. Now, when you claim universal credit and are self-employed at the same time, the work coach will figure out if you are called what's called gainfully self-employed. That's based on 3 factors. The self-employment that you're saying you're doing has to be either your only or your main form of employment. It also has to be that you're carrying out some kind of trade, profession, or vocation. And then it has to be that you're doing the self-employment in expectation of profit. Key word there is expectation. You don't actually have to be making a profit at the time, but if you are working to build your business, increase your revenue, make a profit, then they can determine it as gainful self-employment. So the question arises, what if you're not actually making any profit at the moment, right at the start of your self-employment, right at the start of your business? So that brings in these 2 other points, which is what's called a minimum income floor and a startup period. Now, a minimum income floor, they essentially will apply after a certain period of time an amount that they expect you as a self-employed person to be earning while claiming universal credit. They'll take the national minimum wage that applies to you based on your age. They'll times that by what's usually expected as 35 hours per week for full-time work, and they'll take away a notional amount for tax and national insurance purposes. That will be what's called your minimum income floor. That will be applied to your universal credit claim as earnings, even if you're not actually earning it. It can be quite a difficult thing for people to have to deal with the universal credit claim, to be honest with you. But there is what's called a startup period. For the first 12 months of your self-employment on universal credit, they will not apply the minimum income floor. So if you make, say, unfortunately, a loss in your self-employment for the month, your expenses are more than what you had actually coming in, and you've made a loss, they'll treat that self-employed earnings as 0, and they won't apply the minimum income floor. 12 months after that, they will have expected you to have built your business to the point where you would be making a profit, and they will apply the minimum income floor. So even if, sadly, you're not making profit or profit above the minimum income floor level they determined for you, they would still take a deduction based on the minimum income floor that they've calculated. All right. So that was all about universal credit. There was a lot of information there. We'll apply it to some real world examples in a bit to make it sort of make a bit more concrete sense. We're going to talk a bit about contribution-based benefits now, though. What is a contribution-based benefit? Contribution-based benefit essentially means that someone's eligibility is based on their national insurance record of the last 2 full tax years prior to the current calendar year. So if we're looking at now, 2025, the tax years they'll look at will be 2022, 23, and 2023, 24. Then you can see the other relevant years there for 2026 and for 2027. To qualify for a contribution-based benefit, you have to meet these 2 conditions. First, you need to have at least 26 weeks of contributions on earnings at what's called the lower earnings limit in one of the last 2 full tax years. So what that means is if we're looking at 2025, you make a contributions benefits claim now, they're going to look at 2022 and 2022, 23 and 2023, 24. In one of those 2 years, you need to have earned for 26 weeks, basically £123. Doesn't mean that you have to have contributed £123, but your earnings have to be £123. The second condition that you have to meet is that over both of the last 2 tax years, the last 2 full tax years, you have to have the have to have earned the lower earnings limit times by 50. So if we take that 123 that you see, times it by 50, we get 6,150. That means that across both years, so both 22-23 and 23-24, you have to have earned £6,150 at least. That, if you meet both of those conditions, you would essentially be eligible for a contribution-based benefit. Now, it's fairly common that people will not know off the top of their head, what exactly their national insurance record is, what have they earned. It's very difficult to know these things off the top of your head. So I generally recommend to people, if they are thinking about making a contribution-based benefit claim, you can check your national insurance record, see what you've paid over the last couple of tax years, see if you would be eligible by going on the gov.uk website. This was a very helpful website. If you just search check your national insurance record, gov.uk online, you can see what your national insurance contributions are up to the current tax year. There's two contribution-based benefits I want to speak about briefly. New Style ESA, Employment Support Allowance, and New Style JSA, New Style Job Seekers Allowance. New Style ESA, this is a benefit for people who may have stopped working recently due to a health condition or a disability. You may notice again, right on the bottom there, the WCA, I said it would make another appearance. The WCA for New Style ESA is the exact same assessment process for the WCA I mentioned with Universal Credit. It's the exact same thing. The only difference is the code they put on the form for them, basically. Now, the two other terms we've got, they're work-related activity group and support group. And they seem a bit different, but they're actually quite similar to what we've spoken about before. You should see here that the work-related activity group in an ESA claim is the exact same thing as limited capability for work for Universal Credit. And support group is the exact same thing for limited capability for work-related activity under Universal Credit. Now, what if someone claims both benefits at the same time, which is certainly possible. It's not very common, but it does happen and it is possible. If someone claims both benefits, they only have to do the work capability assessment once. If they've claimed New Style ESA and then they later claim Universal Credit at the same time, they don't have to go through the assessment twice. The result of one carries over to the other. Same as with the Universal Credit classifications I spoke about. With the work-related activity group nowadays, there's no additional money involved in your ESA, so that's actually what you receive. But with the support group, there is an additional component, which means additional money received. Furthermore, if you're in the work-related activity group, your New Style ESA claim is generally limited to a year, whereas if it's in the support group, it's not time limited and can continue indefinitely. Very quickly, just want to talk about how statutory sick pay is relevant to a New Style ESA claim. You can't claim New Style ESA and statutory sick pay at the same time. If you're earning statutory sick pay from your employer at the moment, if you're receiving that, if you're in the last 3 months of your entitlement to that, you can claim New Style ESA at the same time. You can make the claim, essentially. It won't start till it's ended, but you can start the claim process. All right. And then finally, New Style ESA, can you claim it while working at the same time? The short answer is yes, but there are a couple of rules. Essentially, you have to do what's called permitted work. Permitted work means that your work that you're doing while claiming New Style ESA has to be limited by these two things. Has to be 16 hours a week or less on average, and what you actually earn has to be £195.50 or less after tax and national insurance. So it is certainly possible for someone to work and claim New Style ESA at the same time. There's just a couple of rules there that are relevant. And then just one quick slide on New Style JSA, Job Seekers Allowance. This is for someone who stopped working, but not because of a health condition or a disability. They may have just lost their work for some other reason. If it wouldn't be beneficial for them to make a Universal Credit claim, they may make a New Style JSA claim. New Style JSA is time limited. It only lasts about 6 months. And if you are doing permitted work at the same time, it has to be less than 16 hours a week. So if you're doing more than that, you wouldn't be able to continue your New Style JSA claim. All right, so that was a whole bunch of information. I appreciate there was a lot of information I've thrown you at once there. What we'll do now is we're going to look at some real life case studies. They're not actually real people. These are sort of hypothetical examples, to be clear. Each situation here, the person or the people involved are going to be claiming a benefit and a sort of a life change or something will happen, and then we'll look at how their benefit is affected and if it is. Our first case study today is going to be John. John is in his 50s. He's worked most of his career in office-based jobs. Sadly, John was diagnosed with a health condition about a year ago, and he's had to take some time off work. John has used up all of his statutory sick pay. His whole 28-week allowance from his employer has been used up at this point. After speaking with his employer, they've mutually agreed that he wouldn't return to his previous role. So he has to leave his employment, basically. John looks at what benefits he may be entitled to. His capital levels are just too high. They're above the £16,000 threshold I spoke about for universal credit, so he can't claim that. He does, however, meet the 2 national insurance contribution conditions for claiming New Style Employment Support Allowance. So John makes a New Style ESA claim. He goes through the work capability assessment and, on the basis of his health condition, is sorted into the support group. Now, John likes to keep busy. He doesn't want to, just sort of have too much time on his hands. So he wants to do some work at the same time. He contacts his sort of local employment support charity to help him in finding work that sort of fits his needs and an employer that can sort of accommodate him. And after a short while, John is lucky enough to find a job that is suited to his abilities and his needs. Now, John has to look at whether this work that he's now doing fits within the permitted work rules. So he has to report this work to ESA, tell them that he's now doing this work. He does so, and essentially, John's work is within those rules. It's less than 16 hours a week. He's doing about 2 days a week, and he's earning less than £195 a week. So John is able to do both. He's able to claim ESA to give him a bit of extra support financially, and do that work to earn a bit of extra money and also keep him busy at the same time. That was John. We're going to move on now to our second case study, which is Carrie. Now, Carrie is in her 30s. She's single. She lives alone in a 1-bedroom flat that she rents, and she has no significant health conditions. Sadly, Carrie recently lost her job. Her employer went out of business, and Carrie wants to find a new job and continue working, but essentially has to claim some kind of benefit in the meantime to pay for her sort of needs and things. Carrie meets the universal credit eligibility criteria. She's got less than £6,000 in total capital, so she can make a claim for universal credit, which she does. She has no significant health conditions, like I mentioned, so she'll be put into the all work requirements group that we spoke about. This means that Carrie is expected to look for work and make herself available for work. This is her first universal credit payment that she receives. She gets £400 of the standard allowance for someone in her situation, and she gets a housing cost element to help with the rent for where she lives. So the round number there is it comes to about £1,400. It's her first universal credit payment. After a short while, with her work coach's help, Carrie finds a new job. She's working, pretty much full time. She's working about 28 hours a week, and she gets a monthly income. I've determined it to be about £1,500 a month. So it's not a huge sum of money, but it is some work. This is enough to put her in the earning enough group. That means that she's no longer required to look for work or to make herself available for more work. Universal credit is satisfied she's doing enough work at the moment. So a deduction needs to be taken based on this earned income, right? There is no work allowance applied because she doesn't have LCW or LCWRA, and she doesn't have any children. So what they do is they take the £1,500 she earns, they times it by 0.55, which I think gives us a sum of 825 as a deduction. And then we look at her next universal credit payment. She's got £1,400 as her standard payment, but minus the deduction is 575. So where does Carrie end off? Where do we leave her? Carrie earns £1,500 from work, which she gets to keep all of course. And then she gets £575 of universal credit to top up and supplement her income, meaning her total monthly earnings are £2,075. So we can see here how Carrie made the claim for universal credit, found work, the work affected what she received, and the situation she's in now. All right. Case study 3, we're going to look at a family situation here, and the Smith family, which is David, Sandra, and Olivia. So David works full-time. He's the primary earner in the household. Sandra has worked full-time in the past, but over the last few years, while Olivia was growing up, She's only worked part-time. Olivia has recently started school. Sandra's worked part-time, about 12 hours a week for the past couple of years while Olivia was growing up. Olivia, as I said, has started school recently, so Sandra doesn't have to take as much care as her. She's got a bit more free time. Sandra would like to return to full-time work. She'd like to get back into working full-time now. So she looks at what benefits and things are available to support her in looking for more work. Now, as a couple, David and Sandra's capital calculation is made together. Now, they exceed the universal credit capital limit, so they can't claim that. But Sandra's national insurance contributions do qualify her to claim New Style JSA, Job Seekers Allowance. She makes a New Style JSA claim, and she works 12 hours a week while job searching. That's within the permitted work rules that I touched upon briefly. What Sandra's actual earnings are, she earns about £146.52 a week from the very small amount of part-time work she does, and she gets £92.05 per week additionally as part of her JSA claim. Eventually, after a while, Sandra finds a new full-time job, which means that she can leave her previous part-time role and start the new full-time job. But how does this affect her JSA? Well, Sandra's new work is above the permitted work rules. It's above 16 hours a week, so it's full-time, which means her JSA claim has come to an end. And we're going to look at our last one here, our last case study.
Ben, sorry, just before we do Daniel, I'm just a bit concerned about the time. Can we just check in with everybody, that everybody is with you so far, and whether there's any questions? Could you just bear with me one
Sure.
second? Is there anybody that would like to unmute themselves and either speak or put their questions in the chat?
I have a quick question. So that's regarding the second example, Carrie.
Yeah.
So she would still get the £575 universal credit after finding employment. That supplementary universal credit, would that be indefinite, or is it just temporary?
So it would apply for as long as her circumstances remain that way. If she gets an increase in her pay at work, then you would imagine the amount of universal credit would decrease. If sadly again she lost that job, her universal credit would increase again because there'd be no deduction to take. But if her circumstances remain, for as long as they remain that way, that she lives in that flat with that rent and she earns that much from that income, then it will remain that way. If there's a change in her where she lives, the work that she does, whether she sort of has to now make say she gets married or something, she has to make a couple claim. If she has a child, which comes with a child element, significant change in her circumstances would perhaps change it. But as long as the circumstances remain that way, that the universal credit claim would stay the same.
Okay, so there is no a threshold, earnings threshold above which that person will not get universal credit at all. Is based on circumstances.
Well, so if her earnings increased to the point where the deduction was more than the entitlement, she'd stop receiving it. So if her deduction ended up being more than the £1,400 that she's entitled to, she would then stop earning. So when it comes to a sort of threshold, it really depends on the person's individual circumstances. Because if she had a child element involved, there's additional money that comes with that. The overall entitlement would be more. So the deduction to bring it down to zero would also have to be more, if that makes sense.
All right.
There's not really a consistent across the board threshold for everyone. It really depends on the nature of the person's circumstances when they claim universal credit.
It's very confusing. It's really difficult to calculate.
Yeah, I appreciate that. It can be difficult to calculate sort of these type of things. But as I sort of mentioned at the end, if anyone has any particular individual circumstances they'd like a bit of advice on, they're always welcome to be in touch with us, and we can help them figure out how any changes or what their situation will affect them in whatever way.
All right, thank you.
Thank you.
Can I just ask a quick question,
Of
please?
course.
If you have savings of more than 16,000, are there absolutely no other benefits you can tap into?
So typically someone who has more than 16,000 in savings would look at a contribution-based benefit, because a contribution-based benefit is based only on the contributions of national insurance that you've paid over the last 2 full tax years. It's not based at all on capital or savings amounts. The capital amount only applies to means tested. So contributions are non-means tested. So if you have above 16,000 or someone has above 16,000 in savings, they would mostly look at a contribution-based benefit claim would be available.
But
Just
then
to
if
be
you
clear,
have
just
a,
be clear on the capital amount. That's the general rule of thumb is the 16,000. There are some instances where things can be disregarded. So they can sort of not take into calculation certain things, but that will really depend on an individual circumstance level. That's something that we could talk about with someone on a more personal basis if they were in touch with us.
okay, thank you.
Thank you, Alex. Thank you for the question. Any other questions at all at this point? Okay, hold on. There's a question in the chat. Ben,
Okay.
1 second. Okay, I'm not sure who this is from. Whoever this is, iPhone 2. Is it possible to put your name in the chat? Otherwise, I don't want to talk to you as iPhone 2. It feels really, really rude. So, so the question is, Ben, is ESA is not means tested?
So yeah, so new style ESA that I've spoken about is not means tested. There is an old form of ESA called income related ESA that is means tested, but that you cannot apply for that anymore, and it's being phased out. So that's why I haven't spoken about it here. But new style ESA is not a means tested benefit. And then, so I'm looking at the question sort of here. It also says, yeah, also in your case study, universal credit helps with rent. Does ESA help with mortgage payments? So universal credit will help with rent as a housing cost element. It's essentially replacing housing benefit for almost all cases where people need help with rent costs. Universal credit won't generally help with mortgage payments. There are certain things for support with mortgage interest, but those are paid as loans, and it's a very complicated sort of matter that would need a lot more personal sort of time to speak about. But generally, support for the payment of a mortgage doesn't come from any benefit. I'm afraid it would only be rent costs.
Okay, brilliant.
Hope that answers the question there.
No, I think that did. Thank you, Ben. And thank you, Paul. Are there any other questions that people would like to ask verbally or put in the chat? If not, then we'll go to case study number 4, which is Daniel.
All right. Okay. So yeah, so we'll look at Daniel. So Daniel's going to be the one we look at when we're going to talk about. Oops, there we go. Sorry, put him in the corner. There you go. So Daniel's a young man in his early 20s. He's just graduated from university. He lives in a house share with some friends at the moment. Daniel's quite an entrepreneurial young man, and he wants to start his own business. He's going to start his own business, but he needs some kind of financial support to help with his living costs while he gets things going. So Daniel makes a universal credit claim to help him with things like his rent costs and his basic sort of costs in life while getting his business off the ground. Daniel's work coach looks at the situation and says that Daniel is gainfully self-employed. That means he meets those 3 factors I spoke about, right? This is his main or only form of employment. He's carrying out a vocation, a profession, or a trade, and it's being carried out in expectation of profit. Keyword there, expectation. The minimum income floor is disregarded for 12 months here. So he gets that startup period. Isn't that startup period of his business? They're not going to take into account any minimum income floor for the first year for Daniel. So let's look at his maximum entitlement to start off with. For his age, he gets a standard allowance of £316, and the cost towards the house share with his friends is £700. So he gets a total universal credit amount of £1,016. Let's look at some deductions. So Daniel gets his business going, and at the beginning he's earning a small amount. He's earning £500 a month from his monthly self-employed earnings. What Universal Credit will do is they'll take that £500, times it by 0.55, which gives us a 275 amount, and they'll take that as a deduction from his 1,016. That means they can see it's a little bit small, but you can see that the Universal Credit that Daniel will actually receive is £741. Add that to his £500 of actual earnings, which he of course gets to keep all of. He has a total monthly income of £1,241. So we check in with Daniel about 12 months later. The minimum income floor is now being applied. His startup period has come to an end. They calculate a minimum income floor that's relevant to him based on his circumstances, and they decide that it's 1,626. So that they times that now by 0.55. They assume this income even if he's not actually earning it, which gives us a total deduction amount, a new deduction amount of 894. So we look at his situation. His universal credit payment is pretty much the same. they take a larger deduction, which means that he now gets less universal credit. Luckily for Daniel, the situation I sort of put him in here, he's actually doing a bit better off. His income has increased to £1,000 from his self-employment, not £500. But the 1,000 is still just below the 1,000. It's still a bit below the 1,626 that they're assuming or applying. So essentially, even though he's earning, unfortunately, less than the minimum income floor, they're gonna take that total 894 deduction. So that means that he's actually slightly worse off after the minimum income floor starts getting applied. This can unfortunately be the case, and the minimum income floor can be a real struggle for people in self-employment and universal credit at the same time. So Daniel contacts his local employment and business support charity to help grow his business. And they help him sort of grow his business, grow his customer base, and get things moving a little bit more. And then eventually, after a short while, Daniel does a lot better. His business is doing quite well now. His monthly earnings are all the way up to £2,500. We look at his universal credit deduction based on this. They'll take his earnings, which is 2,500, which is now above the minimum income floor. They'll times that by 0.55, which gives us a total deduction amount of 1,375. That's more than his universal credit entitlement, which was about 1,016. So that means that his earnings, his deduction based on earnings is more than his total entitlement. So he gets essentially zero from the universal credit. Daniel's fine with this because he can support himself on the monthly earnings from his business. After 6 months of this happening, where he gets £0 from his universal credit, the claim is closed automatically, and Daniel continues on with his self-employment business independently. Right, so that was the case studies that I wanted us to look at. It kind of applies all the information that I gave you at the beginning there to some kind of real world examples. And when you apply it to a person, hopefully it makes a little bit more sense, feels a little bit more real. So those are what we've covered today. We're reaching the end here. Means tested benefits, we spoke about universal credit. Contribution-based benefits, we talked about new style ESA and JSA, and we tried to apply them to some real world examples in our case studies there. That brings us basically to the end, the content of what I've got to present to you today. On the screen, you should hopefully see our helpline number, which is 0330 174 4300, and then our website, paperweight.org.uk. You can either be in touch with us on the helpline here. You'll speak to one of our helpline assessors who will take some information from you and see if it's something, if your sort of ask for help is something that we can sort of help you out with. Or we do have a self-referral form that can be found on the contact us page on our website. If any of the things I've mentioned feel like they may apply to you, if you have a question that would be more specific that I couldn't quite answer in the setting of this presentation, please do, I would urge you to reach out to us and see if we can offer some kind of help and guidance. We'd be very, very happy to hear from you. With that, I'll stop sharing my screen. I think pass back to Sarah to wrap this up. I think we're going to have a little more Q&A if there's a little bit of time.
Brilliant. Ben, thank you. We have one more question in the chat that I'd just like to ask you, please.
Yeah.
And it's a question. The question is, does carers credit count as contributions?
Carers credit. So with the contributions, I think there's a general requirement that contributions have to actually be from actual employment. So you can get national insurance credits for claiming certain benefits. So a range of them. I think, yeah, carers allowance included, along with things like universal credit, you get credits. Those are often accounted towards someone's pension entitlement in the future once they reach state pension age. But when it comes to the national insurance contributions requirements for the benefits, I believe as far as I'm aware, the contributions would have to be on actual earned income as opposed to actually credits, I believe in most cases. But that is something we could look into in more detail if you wanted to be in touch, and we could try to figure out look at your exact situation, someone's exact situation, and try and figure out what the best way forward would be.
Brilliant, thank you. Are there any more questions from the group? Because we've got a couple of questions here at Work Avenue that people have submitted to us in advance, but I just want to check. Is there anybody else wants to put their hand up or wants to put something in the chat? If not, while we've got Ben here, we have a couple of questions from Work Avenue. The first one is it easy to restart a universal credit claim after leaving a job?
Is it easy to start a claim after leaving a job?
Yes. Or actually, most probably, is it easy to restart it? So if you've been on universal credit and then you start work, and then for whatever reason you leave a job, is it easy to restart the universal credit?
Yeah, so a universal credit claim doesn't automatically close as soon as someone starts work. As I sort of mentioned in Alex's case study at the end, the last case study, if someone earns £0 from their universal credit for 6 months, then the claim is closed. It can remain open for that time. So if someone starts a job and they wouldn't receive anything from universal credit because their earnings would be more than the entitlement, and it comes to £0, that claim can stay open for 6 months in that way. If after a few months the job isn't working out and they leave, the claim is still open, and then they can start receiving money from essentially the point where they leave the role. If the claim has closed, they've closed it voluntarily, or it's been more than 6 months, it should be a fairly simple process to start a new claim. You could probably do it on the same day that you could do it before you actually leave the job, or you could do it sort of the day after you leave the job. Yeah.
Amazing, brilliant. Okay, any questions at all on anything that that Ben has talked about this morning? No. Okay, so that just remains.
I think maybe we had one more.
I'm so sorry.
Just had one.
Yes, sorry. So it was a lot of information, so I'm not quite sure if I got it right. I had 2 questions actually. When somebody's income, let's say, increases over that threshold, as you said, that they wouldn't get any contributions. It's only after 6 months when they would basically be taken off universal credit, or if let's say after 6 months that person lost their employment, they will need to reapply for the universal credit, right?
Yeah. So if someone if someone doesn't receive any universal credit because their deductions are more than their entitlements, they're receiving the £0 for 6 months.
6 months,
and then the claim gets closed. The claim will be closed. They'd be able to use their old the account remains in existence. It's just the claim is closed. So you could log in on the same account using the same login details and just submit a new claim from there.
All right. Well, does that mean that person will need to do another limited capability for work assessment?
So if someone's doing a work capability assessment, in most instances I've come across, it would be quite rare for someone to receive limited capability for work related activity and then essentially be earning enough to the point where it would reduce their universal credit down to 0. Because if that person would have to be doing more or less full-time work to have an income amount that when the work allowance is taken into account, then times by 0.5 would be more than their total entitlement anyway. So it would be quite rare, I think, for someone on LCW or LCWRA to be working that much that it would result in a deduction down to 0. If their claim did closed and they had to make a new, if that was their instance and their claim was closed because they earned too much for 6 months, and they had to make a new claim, they probably would have to go through an assessment. But more likely, I think, to be honest, would be the work coach would see that they're doing that, probably at that point it would have to be nearly full-time work, and may question or ask for a reassessment of their capability for work based on the fact they're working nearly full-time hours at that point while being in the limited group, if that makes sense.
Yeah. And so another question was, it was the higher lower allowance. So I have ADHD. I'm actually on the lower allowance, 411. But what would be the criteria for the higher?
Really sorry.
I'm just gonna. I don't want to get too into the
we can't answer personal thing, but you've got Paul's details, and I'm going to email you today with the name of the organisation and with the telephone number and with the website, so you can ask any personal questions. Because this is a group and it's online, and because we're recording it, we're not able to answer personal questions. So I'm so sorry to cut you off, but thank you for asking everything. So just as thank you from Mel and I, from all the team at Work Avenue, and from everybody who attended. First of all, to Ben for all the work that's gone into preparing this for today, for the case studies, for the animation, which was a big surprise. We didn't know we were going to get people shooting across the screen.
I'm glad the animation worked. I wasn't sure if it would work.
No. Everybody in the family moved. It was great. for all the work that you've put in to today. So thank you very much, not just from the team
Thank
at
you,
Work
pleasure.
Avenue, but from everybody who also has attended, and also to the wider team at Paperweight for working with us. So to Bela, to Barry, and to Paul. So thank you very much for that. Everybody who's attended, I will write to you and send you our details at Work Avenue and a list of the events that we're running so that we can continue to support you. And I'll also send you the details that Ben has shared on his final screen so that you'll be able to contact him. Thank you very, very much to everybody. Thank you to Paperweight, and thank you to everybody who's attending. I'm going to stop the recording now. Thank you very much. Bye.
Thank you very
Thanks, Al.
much, everyone. Bye bye.
Thank you.
Bye.
Bye bye.